All right, that is some important opinion coming in, and that's everything that we're tracking globally. But let's now talk about the cues that you should track as we get into a fresh trading session. Our research team joins us now with the trade setup. Nigel, Rima, and Vaishta all join me now. Guys, a very good morning to all of you. And Rima, let me come across to you first. We saw a sharply lower close yesterday, over 1% lower on the index. How's it looking this morning?
Well, absolutely. Especially towards the end, the selling pressure picked up, but the Nifty managed to hold on to that 18,000 level, a level which a lot of technical analysts were watching. That said, on the upside, we seem to be facing resistance around that 18,250, 18,260. For the last 3 trading sessions, we got there, we were hovering there, but we couldn't quite conquer it. So that continues to remain a level to watch on the upside. FIs have been selling in the cash market now for 9 consecutive trading sessions. Yesterday, the FIs sold big, 2,620 crore in the cash market, while the DIIs bought 773 crores. So net-net, we're looking at a net institutional sell figure of 1,900 crore rupees. As I said, the broad range will be 18,000 to 18,250. We've been talking about the US markets. They managed to end higher despite hawkish sounded FOMC minutes, as well as the disappointment on the ISM manufacturing data. But for our own markets, the focus could be on crude prices, which have fallen 10% in the last 2 trading sessions. Brent crude prices were at $86 per barrel very recently, and now they're down to $77.50 per barrel. And the dollar index, the decline in the dollar index is positive for risk assets like India. The dollar index was at 104.5 yesterday, and that's eased down to levels of 104 as we speak. So this morning, there could be an open, as the SGX Nifty is suggesting, the opening could be in the green. Can we conquer 18,250? That will be a level to track, and there will be a lot of focus on the individual quarterly updates. Back to you.
All right, so there's a lot of focus on the individual quarterly updates. So a lot of these individual names could be in focus today. Vaishta is here with that entire list of stocks that you should keep on your radar. Vaishta?
Hi, Pavitra. Good morning. Let me start off with Adani Ports, wherein the December total cargo volumes are up 8% on year-on-year and has come into 25.1 million metric tons. In fact, for the 9 months of FY23, the total cargo volumes was also up 8% on year-on-year basis and has totally come into 253 million metric tons. Moving on to Bajaj Finance, which has their quarterly business update, the company has recorded the highest ever quarterly increase in its customer franchise of 3.1 million. In fact, the new loans booked have come in at 7.8 million, which is to be compared with 7.4 million. The AUM has grown by 27% on year-on-year basis. Marico also has the Q3 FY23 business update. The company says that the urban and premium segments have maintained a steady growth in the past quarter. Also, the India operations saw a mid-single-digit volume growth. HPCL has forayed into a petrochemical business with pre-marketing of HP Durapol brand polymers, which is a precursor to marketing of HPCL Rajasthan Refinery petrochemical products. Now, this HPCL Rajasthani Refinery is setting up a new 9 million tons capacity in Rajasthan. Mahindra Finance, the news is that RBI lifts restrictions on recovery via outsourcing. For RBL Bank, there is another Q3 update, wherein the total deposits have grown 11% on year-on-year basis, have come in at 81,700 crores. The CASA is also up by 18% on year-on-year basis. And the last stock is IRB Infra, wherein there is a stock split. The company has approved the subdivision of 1 share into 10. Back to you.
All right, that is a lot of stocks. Vaishta, thanks a lot for bringing us that entire list. Finally, let's also talk about all of the cues from the futures and options space. And Nigel, like Rima was pointing out, that is a big FII sell figure.
Well, that's right. And the net institutional number, the sell number is close to 1,900 crores. We haven't seen that sort of a number in the last 3 months. The last time we saw such a large number was in early October. So that's a bit of a worry, the kind of selling that we're seeing from the FIs. And the FIs, they have gone all in on the short side. And there's no other way to look at it besides they're viewing this market a little bit bearish, at least in the near term. All the cues coming in there. They sold in the cash market. They added shorts big time, close to around 22,000 short contracts. The short positions from around 45%, it's moved all the way to around 64% or thereabouts. They bought more puts than calls. And the important one is they wrote calls and they wrote it very, very aggressively. So all the cues, you can't hedge yourself. The FIs, they haven't. So they've gone with bearish cues for today. The question is, are they going to get stuck on the wrong side? In terms of the call writing, let's pull up 3 strikes. The 18,100, 18,150, 18,200 call. Between those 3, they added 2 crore shares. So that's aggressive writing that we've seen out there. And that's what caused the PCR to move from more than 1 to 0.72. remember at around 0.65, 0.7, that's where we see a bit of a bounce on the index. So if the index can hold on to this gap up that we're looking at, maybe in fact risk reward could favor a buy. The support level is at around 17,900. I'll give you two reasons for that. The 18,000 put has the highest open interest, point number one. The second factor is the 100 DMA comes in at around 17,900. So keep that in mind. And the 18,250, in the last two sessions, we've gone there 3 or 4 times. And then we've seen some bit of, pullback. So that's a bit of a resistance zone. SGX Nifty is suggesting a gap up. Holding and building onto this gap up is very, very important in today's trading session. My guess is you'll get an intraday dip that could get bought into with that support zone of around 17,900 to around 17,950 odd. Back to you.
All right, that is the trade setup for today. Nigel, Reema, Vahishta, thank you very much for joining us and prepping us up for that. But with that, it's time for our first short break on the show. Up next, Microsoft CEO Satya Nadella tells CNBC-TV18 that India is an exception in the challenging global scenario. Also warns of a difficult 2 years for the tech sector, except from that exclusive conversation after this short break. Hey guys, welcome back. You're still tuned into Power Breakfast. Now, the past 2 days, we've been getting a lot of these updates from the financial space. We also got Bajaj Finance and RBL Bank, which released their third quarter business updates yesterday. So Abhishek is here to fill us in with all of the details. Hi, Abhishek.
Good morning, Pavitra. So, Bajaj Finance, the customer growth is very good. However, AUM growth has moderated despite the fact that, disbursements have been strong. So, new loans are at all-time high of 78 lakhs, up about 14.7% quarter-on-quarter. Remember that in the previous quarter, it was a negative growth of more than 8%. Customer base, that's up 19.1% YOY and about 4.93% sequentially. Historically, Q3 has been pretty good because of festive season, but in the last 4 to 5 years, this is the lowest growth that you are seeing. So AM growth is up 27.4% YOY and about 5.7% sequentially. The average ticket size that's remained muted, up about 7% YOY and about 0.8% sequentially. Deposit momentum has been pretty strong. Capital wasn't consumed for this kind of growth, which is good. And liquidity in the balance sheet has improved, which is a good point to take away. However, the AM growth may dishearten investors today. Coming on to RBL Bank, it's one of the best business update that you have got amongst lenders or banks. So loan growth YOY is the best in 12 quarters and sequentially best in 15 quarters. Deposit growth YOY is best in 5 quarters and sequentially one of the best in 3 quarters. So deposit momentum was 11% YOY and about 3% sequentially. Loan growth momentum was around 14% YOY and about 5.8% sequentially. This has led to CD ratio improving both YOY and quarter-on-quarter. One of the key factors to note in the business update is that they have seen, CASA ratio improve, and CASA ratio is at all-time high. Unlike other lenders where you have seen a decline in CASA ratio, this is one of the heartening point to see, and retail deposit also being very strong augurs well for them. Back to you.
All right, Abhishek, thanks a lot for detailing that fine print for us. So keep these stocks on your radar today. Finally, let's also focus on the tech sector now. Layoffs continue into 2023. Amazon, which is the largest employer in the United States, will hand over pink slips to thousands of employees amid growing recession fears. Remember, this is in addition to the roughly 10,000 staffers that the company planned to let go off last year as well. Additionally, cloud-based software firm Salesforce also says that it plans to cut jobs by 10% and close some offices after rapid pandemic hiring left it with a bloated workforce amid an economic slowdown. So that is what is going on across hiring in the tech space. But staying with tech, Microsoft chief Satya Nadella says that he remains cautious on the short-term outlook for the tech sector, although the long-term picture looks quite promising. In an exclusive conversation with Shireen Bhan, he adds that the next 2 years will be challenging after the pandemic-led acceleration that we saw in the sector. Listen in.
Inflation, recession fears across most parts of the world at this point in time. Interest rates continue to move higher. Is it all flashing red on your dashboard? Is there any sign of green at all?
I mean, it's clearly many challenges right now around the world. In fact, India is probably the exception. There are parts, India, Middle East, Latin America, some of the other parts of Asia are the things that are green. And I think Europe and the United States are going to be challenged. I mean, United States, not yet, but I think 23 will be much harder. So yes, we want to be very cautious in our outlook in the immediate term. Long term, I'm very bullish of us coming out, right? Because there are two cycles, I think, Shireen, that are happening. One is a supply cycle that's a very long cycle. That's a secular shift. We're not going back to 2010, 2011. Because of the geopolitics as well as essentially the rejiggering of supply chains, I think we're going to have a supply cycle that's going to persist. The demand cycle is going to be a classic demand cycle. There will be some economies that will go through a recession. Some may be deep, some may be minor. And then inside of that, there will be pockets of growth like India. And so I think for us as a global company, we're not going to be immune from what's happening in the macro. We will have to also get our own sort of operational focus on making sure our expenses are in line with our revenue growth, manage the short term, but make sure we're investing for the long term.
That is Microsoft CEO Satya Nadella telling us that the global setup, of course, is challenging, is likely to remain that way for a couple of years at least, but India does stand out as the exception. But with that, we're going to get into a short break on the show now. On the other side, as always, we track cues from the commodity markets and bring you all of the details on why there's been a big slip in oil prices. Welcome back. You're still tuned into Power Breakfast, and let's talk about the commodity space as promised. Manisha is here with an update. Manisha, once again, it is really the energy space which continues to grab headlines.
Oh, it does, yes, Pavitra. After falling 10% in 2 sessions, we've seen a percentage point of gain in the Asian markets right now. But then again, the prices had been oversold, and there is some opportunity buying that you're looking at. Because apart from that, the weak global demand outlook still continues to weigh. The Chinese rising COVID cases and death toll is still impacting the market. And then China has raised refined oil export quotas as their own domestic demand is on the weaker side, also is weighing onto the prices here. Apart from that, if you look at the manufacturing data, that has contracted not just in China, but the US as well. And the OPEC and allies for the month of December have produced more crude as compared on a month-on-month basis. So there are more supplies coming into the market, and demand not catching up will continue to weigh onto the market. So we are trading below $80 a barrel for both the crude varieties at this point in time. The rebound, though, has come in for the U.S. natural gas prices. After falling 25% in 5 days, we have seen a 5% of a jump up in the overnight market. Again, this is a trading thing because the mild weather forecast for the month of Jan will continue to keep pressure on prices.
All right, Manisha, thanks a lot for getting us all of that action from the world of commodities. With that, let's take a quick look at the Asian markets. Hang Seng has, cut its gains a little bit. It is still, a 1.4% gain that we're seeing for the Hong Kong markets. But when we started the trading session, we were closer to 2.5% higher there. So a little bit of a pullback there. The rest of the markets holding up just fine. So the Straits is up 1%. You have Taiwan on your screen seeing gains of 0.8%. All in all, this is a very good start for the Asian markets, completely shrugging off what came out of the Fed minutes, and the SGX Nifty also is indicating a good start for our own markets. It has come off a little bit in the past few minutes, but still, around 30 points higher. So that's what we have across the Asian markets. Thanks a lot for tuning into Power Breakfast, and we have Bazaar Morning Call, which comes up after this short break.